Hello everyone. So today we are going to discuss about fraud and fraud risk model. I told you earlier also, let me quickly remind you the importance of this topic. Actually, there is a one section uh, in your CMA Part 2 exam that is called professional ethics. And professional ethics are the, you can say it is the 15% of your exam because there are two units are there on this section. The first unit, which is we are discussing now, which is about ethical consideration for professionals, and then unit number 15, which we will cover later. So that is about ethical consideration for the organization. So in unit 14, we have last time we have discussed about business ethics, and then we also discussed about ethics for management accountant. So today we are going to talk about which is 14.3 topic. It's about fraud and fraud risk model. It's also called fraud triangle. So let's get started. So here we go, guys. First, we are going to discuss about the definition of fraud. What is the fraud? In simple word, fraud is an intentional act to deceive others. Okay, so like when we intentionally we try to deceive others, so that is called the fraud. So the proper definition of fraud is a deliberate act of deception uh, intended to gain an unlawful or unfair advantage. Like it's just intentional or deliberate act to deceive others just to get the gain, unlawful or unfair advantage. Okay, now the question is that in this definition we got actually four key elements here. Number one is it's a intentional misrepresentation. For example, if you are preparing financial statements, maybe you are trying to overstate your assets, or you are trying to omit intentionally certain expenses from the financial statements just to present your company in more a better way. You are intentionally under estimating the expenses or hiding the expenses, and you are overestimating the assets or overstating the assets. So that is what is your intentional misrepresentation. Okay, so here how it is defined: intentional misrepresentation, the act is done knowingly, intentionally you are doing, and with intent to deceive, and your intention is what? To deceive others. This is the first element. And the second element is the deception. Deception means a misleading statements, like how you are deceiving others. If it is, because we are studying about CMA, so definitely if let's assume as a company you publish your financial statement, so what you will do, you can misrepresent the financial statement, you can mislead the statements by omission, okay, or something like that. So that is called the deception. The third word is what? Unlawful gain. Unlawful gain or unfair advantage. What it means here, the purpose is usually to obtain money. Okay, let me give you example. For example, if you are working as a board of director and your salary is performance based, for example, your bonus is performance based. Like for example, if company will achieve certain level of profit, maybe you will be awarded with certain amount of bonus, right? So now here intentionally maybe you are trying to mislead or misrepresent the financial statement just to get the bonus. Okay, so this is what they're trying to tell you. Unlawful gain means the purpose is usually to obtain money. Maybe your purpose is to get money, property, or service. Then victims loss. Here, definitely, if you are deceiving others, so the other party definitely, another party definitely, he may suffer some losses, right, due to your deception. So this is what they're trying to explain here. Victims loss means say it typically result in harm or loss to another party, because one party is trying to take unlawful gain or unfair advantage, and other party definitely will lose, right? So this is what is the definition of fraud in your CMA books. Because we are a management accountant, so they are trying to explain that there are two main types of frauds are there. The first type is called what? Fraudulent financial reporting. This is the first type. Okay, fraudulent financial reporting simply it means you are misrepresenting or misleading the financial statement, or you are providing wrong information just to mislead the users of financial statement. So this is the first type of fraud we will go through in more detail. And second type of fraud is called misappropriation of assets. Misappropriation of asset mean to say like misuse of assets, like maybe the theft of money, theft of inventory, etc. Okay, so we got two main types of fraud here. So I'm going to start with first with the fraudulent financial reporting. So fraudulent financial reporting simply, please remember here, first thing, this fraud is committed by management. Okay, because management is trying to misrepresent the information and they are trying to mislead the users of financial statements intentionally. So that's it. That is why if someone will ask you who commit the a fraud for fraudulent financial reporting, so our answer should be it's a management. Okay, so they're saying the most often this fraud is most often committed by management to deceive financial statement users. Users could be definitely investors. Okay, maybe you are presenting a better picture of the company, but it's your fraud, you are doing fraud, and you how you are doing committing fraud. So you are committing fraud through fraudulent financial reporting. Maybe you are trying to overestimate your assets, overstate the assets, understate the expenses. So definitely due to the understatement of expenses or overstatement of the assets, company financial statements will improve. So here the investors, what they can perceive, okay, this company is very good, so they may invest. It means you are trying to deceive the financial statement users. Okay, maybe if you will provide the correct information, maybe actually you are into the losses. So if they will come to know that you are in losses, so they will not invest. But you are showing that your company is in profit, so you are trying to deceive other and maybe they will invest. Okay, so here, this is what they're saying. Fraudulent financial reporting, it occurs when reported financial statements are materially misstated, like intentionally misstated. Okay, so examples may include, maybe you can overstate the assets, or maybe you are not recording all expenses of the period. Okay, so then, guys, definitely this fraud is never recommended by US GAAP or IFRS. Or sometime when you don't prepare intentionally the financial statement in accordance with the US GAAP or IFRS. Maybe there are certain disclosures which are required by US GAAP or IFRS, but you are not disclosing that information. So again, it will be definitely the fraudulent financial reporting, and it's kind of a fraud, right? So it is the focus of external auditors and the concern of regulatory bodies. Definitely, when external auditors they come for the audit, what they do, they try to identify the material misstatement in your financial statement. So those material misstatement could be caused by error or by a mistake, or it could be intentional act also. So that's why audit is there. So external auditors, when they conduct the audit of financial statements, they try to identify material misstated figures in your financial statements, right? And they're saying it is the concern of regulatory bodies also. For example, tax authorities. Sometimes you may file your tax return which is not correct. Maybe there you may hide some income, so some sources of income, and maybe you may record more expenses just to pay less tax. So that's why again it's a concern of the regulatory bodies. That's why they are more concerned about fraudulent financial reporting. Okay, so then there are some couple of examples they have quoted here, like examples of fraudulent financial reporting. It may include maybe shipping products to distributor that they do not need and recording a sale. So they're trying to tell you, for example, sometime just to boost your sale, you are maybe unnecessary things you are shipping to your distributor and you are recording sales, but actually they didn't order those things. But you are saying, okay, this sale has been made in documents and you are trying to record it. So this is also kind of fraud. Now the question is that why you are committing the fraud? Because if you will increase your sale, definitely your profits will increase. Okay, so then sometime you are recording fictitious sale. It's the same kind of examples by creating false invoices to increase revenue. Okay, maybe sometime you may create fake customers, fake receivables. You may record the sales to those fictitious entities, and just to boost the picture of your financial statements. Again, it's a fraud. Sometimes manipulating the timing of revenue and expenses. For example, sometimes deliberately you are delaying the expense recognition. Okay. uh, that's also kind of fraud. Okay, but if it is not as per US or IFRS, right? If it is not recommended by US GAAP or IFRS, and still you are trying to delay expenses, again it could be fraud again. So then they're saying not recording assets impairment. Asset impairment, it's a permanent decrease in the value of asset, right, due to some event. Okay, so maybe it could be due to fire, flood, but you are not recording the impairment because it's a kind of expense which will go to your income statement, and it's also kind of reduction in the value of the asset, so you are not recording. So these all are types of fraud. Okay, they are saying not recording assets impairment when required by accounting standards. Accounting standard says that you should record impairment in certain scenario, but you are not recording. It's mean deliberate breach of standard is also kind of fraud. Then we got here another second type of fraud, that is called misappropriation of assets. So what is misappropriation of asset? So it is simply misappropriation of asset means to say misuse of the asset. Okay. And please remember, as I told you, fraudulent financial reporting, the first type of fraud was committed by management, but the misappropriation of asset is most often committed by employees. Okay. Employees could be a regular employees, or it could be a person in a fiduciary or control role. Okay. So again, they're saying misappropriation of asset is mostly committed by employees and result from a theft, embezzlement, or defalcation. Now we have to understand here what's the difference between this the word embezzlement or defalcation. Okay, theft, it's very easy. Like if you are stealing money, right? That's a theft. This is misappropriation of asset again. Okay. For example, if you are provided with the car by your employer for the business use, but you are using for personal use, again, it's a kind of misappropriation of asset or misuse of asset. So this is very simple. Theft is very simple. Okay, maybe you may, I didn't mean you, anyone, any employee can steal money, inventory, things like that. So that is theft. Okay, that is simple. But the point is, misappropriation of asset also include embezzlement and defalcation also. So what's the difference here? Please remember here, first of all, embezzlement. Remember here, guys, embezzlement is generally committed by regular employees. Who commit it? Regular employees. Okay, normal employees, not the manager, not the board of directors, normal employee. Okay, so and embezzlement may include theft also, or money misuse of money, or misuse of property by any employee. Employee means a regular employees. Okay, you are not in a position of fiduciary, or you are not in a position of control. So but as a regular employee, if we will steal something or misuse the money or misuse the property, okay, so that is your embezzlement. And here example is written here. For example, cashier is not a big designation, definitely. So it's an ordinary employee. So a cashier collects payment, but secretly puts some money into their own account. So like cashier is receiving some money, collect some money, but he's putting some money, he's depositing some money into his own account also. So that is embezzlement. So remember, embezzlement is committed by a regular employee. But we got here another thing which is called defalcation. Defalcation, please remember, it is committed by a person in a fiduciary role or in a control role. Fiduciary role, like a board of directors. What is fiduciary duty of the board of directors? Fiduciary duty means to say they are acting as an agent of the shareholder. So that is why they should take all the decisions which will benefit the shareholders. They should avoid all conflict of interest, right? We discussed conflict of interest last time. So any fraud which is committed by managerial level or the board of director level, so that is called the defalcation. And here again, it's a theft or misuse of money by someone. It's a theft or misuse of money by someone in a position of higher interest. For example, it could be a finance officer, manager, trustee manager. So remember here, so it's fraud which is committed by in a position of higher interest. Okay, not a regular employee. For example, board of directors or finance manager who is in charge of company funds transfers some to their own account. Okay, like the finance manager, he is taking care of the company finance. If he will misuse it, okay, and he will maybe transfer some money into his own account, so that is defalcation. So most probably embezzlement and defalcation is written together, right, as it's written here in the definition here. But remember, embezzlement is committed by a regular employee, but defalcation is a fraud or theft of or misuse of asset, but by a person in a fiduciary or control role. That person is having control over the asset, that's why he is misusing it, or maybe that person is having a fiduciary duty. Okay, so this is what is the misappropriation of assets. Now, guys, we are discussing here. We got some example. It's continuation of misappropriation of asset again. So we got now here's couple of examples for that. For example, this is the examples like by employee. Okay, employees. For example, cash theft. Maybe taking money directly from the cash register. Like as a cashier, I'm taking or I'm stealing some money from the cash itself, whatever day to day I'm receiving. So that is also definitely misappropriation of asset. Maybe charging the customer more. For example, actual sale price was $10, but you are charging the customers $15. The company needs only 10 because it's actual sale price, but $5 you are using for your own personal benefit, okay, or you are maybe transferring to your personal account. So that is another fraud. They're saying that charging the customers more and keeping the extra money. Extra money is here 5. Okay, then example 3, for example, accepting cash, like maybe you have received the cash from the customer, but you are not recording the sale. So that is also called skimming. Like sometimes we received the cash from the customer, but we don't record because we want to use it. Okay, so that is skimming. Okay, this is also a fraud. And then we got it here, another type of, again, it's a misappropriation of asset. That could be a theft of cash, as I have explained. It could be inventory theft also. Inventory theft is what? An employee secretly takes item, like here you are trying to steal inventory, so your employee secretly takes items from the warehouse and sells them. For example, maybe I picked 4 or 5 items from the warehouse and I will sell outside. Okay, so that is the theft of inventory. It's also a fraud. Then there could be a payroll fraud. It's also misappropriation of asset again. Payroll fraud is what, sometime payroll department, they may create fake employees or the ghost employees, and then they will then they will definitely prepare their salaries also, and but those salaries will not go to employees. Maybe that salaries will go to the directors, or not directors, means say the person who is committing the fraud, okay, in the payroll. Then maybe faking timesheets. Sometime, for example, one worker has worked only 10 hours, but you are recording 14 hours. The worker will be paid for 10 hours, but the 4 hours which you have recorded extra, that money you will take. So that is called faking timesheets to get paid for extra hours not worked. Okay, then we got it here. There is a again misappropriation of asset. That is vendor fraud. Vendor fraud, it's very common fraud. Sometime, for example, I can just give you example. Let's say we have a construction company. Maybe we are going to start a bridge. Okay, a bridge, for example. So this is our project, and now we are, offering, or we are requesting our vendors to quote for this bridge if they want to win the quotation. And now what we are doing, for example, there is a firm which is firm A, company A. I contacted the company A, or maybe the company A has offered me that if I will approve the quotation of the company A, so maybe they may give me some kickbacks, maybe 10% of the quoted price as a bribe. So this is vendor fraud. Okay, this is example here. An employee accepts a bribe to give unfair preference to one supplier. Another example, an employee creates fake vendor and issues payment for service never received. Okay, so but that money you will take. You are just you are saying that, oh, this supplier has maybe provided us repair and maintenance for air conditioning system, but actually it is not the case, and you are processing their payments, but that money you will take. So this is vendor fraud. Then there is an account receivable fraud. Account receivable means say what? For example, customer pays an invoice. Maybe you received some cash from the customer, but the employee diverts the money to their own account. Okay, so that is also a fraud. Like you received the money, but you are not recording it. You are maybe transferring to your own account. So that is also a fraud. Okay, then we got it here, data fraud also. Data fraud is also again misappropriation of asset. For example, banks. So banks, they have, very important key information of the customer, their date of birth, their card numbers, etc. So if you are working in a bank and you are copying customer credit card information and you are using it illegally, or maybe you are selling this information to the third party, it's again a fraud, right? So sometime maybe you have your company has maybe invented a new product or new design, okay, or maybe they have latest design for the product. This product is not yet publicly available so far. Maybe it's under the development phase. Now what you are doing, you are selling that design of the product to a competitor. Again, it's a fraud. Then there's another fraud that is called changing financial record, okay, in the computer systems to hide the theft. For example, maybe customer has paid you $500, but you are recording only $100 that this customer has paid you $100, and $400 you are receiving. So you are maybe putting into your own account. So that is data fraud. Like data fraud in simple words, guys, when this is data fraud when an employee steals or misuse company or customer data. Company data or customer data. If you are misusing it, so that is called data fraud. Okay. Here we got, guys, we got it here, fraud triangle. Fraud triangle means say actually here, what this triangle is trying to explain us. This triangle is trying to explain us that these are three main factors. One is the pressure, second is the rationalization, third is the opportunity. Due to these three factors, people commit the fraud. If these three factors are there, it means there is a high chance of fraud is there. Okay, like in simple, why we commit fraud, why people commit the fraud, this is the why. Okay, why? There are 3 points. It could be, there could be the opportunity to commit the fraud, there could be a rationalization, or there could be a pressure. So I'm going to explain now here why people commit the fraud. First is opportunity. Sometime that's why it's called three triangle. It's called triangle. Okay, so for example, I'm just going to explain here. Opportunity first. Okay, opportunity means say the ability to commit and conceal the fraud. For example, if you are a typical accountant and you know the weakness in the systems, in your accounting softwares, okay, and you can commit the fraud, and then you can hide also by changing some data into the computer system. So it means there is the opportunity now. So please remember, opportunity means say there is the opportunity to commit fraud. Generally this opportunity will come due to a lack of controls, or inappropriateness of control, or due to maybe weak controls. Okay, so here opportunity means say the person who is committing the fraud, he has the ability to commit the fraud, and he has also ability to conceal the fraud. Okay, so here we have here examples here. For example, why these opportunities may arise due to weak internal controls. If company's internal controls are weak, there could be the opportunity to commit the fraud and to conceal it. Okay, or sometimes lack of supervisions or audits. We don't have proper audits, or we don't have a proper supervisors. It means there is the opportunity to commit the fraud. For example, I'm a cashier. I know I don't have any supervisor. My work is not checked by anyone, even it is not being audited. So then it means there is opportunity for me to do something illegal, right? So, or maybe poor enforcement of policies. Maybe you don't have a proper policies or procedures within your company. So it means there is the opportunity to commit the fraud. Here example, it's written here for the opportunity. For example, an employee notices no one reviews petty cash withdrawals. For example, if as a cashier I feel that no one is going to review my work, so then what I can do, I can maybe take small amounts from the cash regularly for my personal use. So that is the opportunity of fraud. Okay, so key insight is what here, it is the only factor like this opportunity that management can directly control. Means say they are trying to tell you this opportunity you can remove, okay, by having strong internal controls, by having more supervisions or more layer of supervisions, or by enforcing policies and procedure. So this thing you can control. Okay, now how to reduce it, this is what the next part I have already explained to you. How to reduce it, how to reduce the opportunity of fraud. So please, they are saying implement strong internal controls or segregate the duties properly, right? Or maybe conduct surprise audits of the different departments. So if the people will have a fear that anytime the audit team can come and they can inspect or they can conduct the audits, so again definitely people will not commit the fraud, or use secure systems with access controls. Okay, so that is could be the way to reduce it. Now the second part was under the under the fraud triangle, that was a rationalization. What is rationalization? Okay, here it's very simple. For example, sometime people they commit the fraud. For example, I am committing the fraud, but to satisfy myself, I am giving my own justification to commit the fraud. For example, here are some examples. For example, I'm stealing some money. I'm stealing some money, but how I am convincing or satisfying myself through my own personal ethics. How I'm saying that, oh, I'm working more, I'm underpaid, it's my right to take it. So it's not a theft. So this is how I'm trying to satisfy myself. Rationalization means to say the fraudster justifies their unethical actions in their own mind. Okay, and for example, second example, everyone does it. For example, if other people are stealing inventory or cash, I'm thinking that okay, it's not a problem, I should also steal the cash or inventory because everyone is doing this. So then they're saying it is just a loan. I will pay it back. It means, for example, maybe I'm stealing some money of the company and I'm satisfying myself by saying this, oh, it's a loan, I'll return it back. Okay, no one is going to be hurted. So then they're saying that no one will even notice. Maybe I'm satisfying by myself. Okay, if I'll do this, no one is going to notice. Okay, are they owe me this for the extra work? Or maybe I'm stealing some money and I'm saying that why I am stealing this money because I'm working hard and they are not paying me well. So I owe, they owe me this. They owe me this amount for my extra work. So this is how we are satisfying. So this is called rationalization. So again, remember, sometimes we commit fraud due to the opportunity. Sometimes we commit the fraud due to the rationalization because we are trying to justify our own unethical actions in our mind by giving self-created justifications. Okay, then and then another question is that why it is hard to detect this the rationalization, because it is based on individual ethics and mindset. Because people they justify themselves, okay, I'm underpaid, it's my right. Okay, so that's why it's very hard to find or detect, because individuals they don't feel this is unethical thing. Okay, or people in oversight roles may wrongly assumes the person is honest. For example, I'm committing fraud. My boss is thinking that, oh, this guy is very nice, so I don't need to monitor his progress or his work. So now here, this could be the reason it is very hard to detect that fraud. Okay, because they trust me. Okay, and now the question is that how organization can influence it, how you can reduce this risk of fraud, especially for rationalization. They're saying that create and promote strong ethical culture. Like you should guide them, the people, okay, what is ethical, what is unethical. For that you can issue a code of conduct. It's a documents in which do's and don'ts are written. Okay, and provide ethics training with real life scenarios. You can offer trainings also to the employees in which you have to force them to realize which things are wrong, which things are correct. Okay, the third pillar of the triangle is that is the pressure. They're saying that sometimes people commit the fraud due to pressure or sometimes due to motivation. For example, I'm committing fraud. Maybe I'm stealing some money. Maybe one of my family member is not well. Maybe he is hospitalized. Okay, and I need money for that, and I'm stealing money now. So that's the pressure. Okay, that is called personal financial pressure. Maybe I have to return the bank loan. I don't have money and I'm stealing money from the company to return my loan or to settle my loan. Again, it's a pressure. Okay. So then they are saying what I have already told you the first examples. Okay. The personal financial pressure, like it could be debt or medical bills. Then sometimes there could be a work related pressure. For example, I'm just giving example. For example, you are board of directors, your salary is performance based, and now you are manipulating the data, okay, just to get the bonuses. That is work related pressure. Sometimes your targets are unrealistic. Maybe you are working in a sale, they gave you very unrealistic targets. Maybe it's not easy to achieve that target, and now you are providing wrong information to your managers that okay, this much sale I will get, or maybe I have got, or maybe I'm in the contract with the customer, so they will buy this much product, so I'll achieve my target. So that is called work related pressure. And sometimes desire for reward or recognition. Sometimes we, this is kind of motivation. Sometimes we want that others should recognize my work, so for that, or I want, I'm pretending that I'm very big guy, and I'm very, hard worker guy and big guy, and I'm providing false information just to get some recognition in the eyes of the board of directors or in the top management. So that is what is called person pressure or motivation. Now I have already given you examples for this. Now we have a sometime there could be a pressure in the business context also. Like there are some examples. For example, you are trying to meet earning targets, okay, or maybe the forecasted information. You are trying to meet the targets in simply, right? Okay, because it in the business context, it's again a pressure on us. We have to meet the targets. Targets could be relevant to sales, maybe to the profits. And now public companies are often under intense pressure to meet or exceed earnings, right? To meet or exceed earnings. Because if they will not maintain the earnings, or if they will not increase their profits, definitely people may sell their stocks, their price may go down. So it's in the business context. So meeting earning target is also important, and sometimes we do the fraudulent financial reporting for that also. Then there is another thing, why avoiding loan covenant breaches. Sometimes, guys, for example, when we take a loan, this is again example in the business context. For example, business, sometimes businesses, they take the loan from the bank, and bank impose some restrictions on the companies that they have to maintain certain ratios at certain level. For example, debt equity ratio, it should not go up by 50%. For example, current asset ratio, quick ratio, or maybe cash flow ratios. So now we are manipulating the data, because if you will maybe present the true information, so then definitely maybe you are not meeting the conditions or restrictions imposed by the lender, but now you are doing some fraudulent reporting just to show them, oh, we are fulfilling all the requirements. Sometimes it could be achieving budget goals. I have already told you that sometimes sales related targets are very tough, very challenging, maybe unrealistic also. It's not easy to achieve, but to achieve the targets, maybe you are not doing anything, but you are presenting the wrong information, wrong data, okay, that this much sale has been achieved or will be achieved. Okay, so that is also could be a fraud, because sometimes business related pressures, they create or they force the people to commit the fraud. Okay, so now, guys, here let me tell you here now, this thing is really important, because this I have already explained. This is a triangle, okay? That why people commit fraud, maybe sometime due to pressure, due to sometime opportunity, or due to sometime due to rationalization. Pressure, I told you, it could be financial pressures. Opportunity means say maybe the due to weakness of controls, that people is having ability to commit the fraud and to conceal it. Rationalization means say he is committing a fraud and justifying his or her actions in his or her mind, okay, by giving personal ethics. Okay, so this is a triangle. Now we got it here. One also, trio is there. Trio mean to say this is sometime also this information is presented in the circle, not in the triangle shape. For example, again, why people commit fraud, due to pressure, opportunity, or rationalization. Please remember this area which looks brown, it means here all three factors are there: pressure, rationalization, and opportunity. If all three factors are present within the company, it means there is a high risk for the fraud. Okay, but if any two uh, uh, components, two factors are there, for example, this area, red area here, this area is made up by pressure and opportunity. So if any two factors are present, we call it as a medium risk. For example, this area, blue area, rationalization and opportunity is there. That's why this blue area is there. Again, it's a medium risk. Okay. And now look this green area, which is forming due to the rationalization and pressure circle. So that is again medium risk. So remember what I'm trying to say in trio concept. We say that uh, we say that if all three factors are present, then there is a high risk for the fraud, which is represented by this brown area. Okay. And if any two factors are there, rationalization opportunity, which is presented by this blue area, or pressure or opportunity, which is presented by red area, or this green area, which is presented by pressure and rationalization, so then it's a medium risk. I hope so, guys, it is clear. This is trio shape. Okay. Okay, so then, guys, now we are going to discuss about some red flags. Okay, red flags, like red flags means that these are the indicators which might give you the indication of possible fraud. That's called red flags. Okay, so first we are discussing red flags for fraudulent financial reporting. Please remember, it doesn't mean if this is there, there is 100% fraud. No, it's, but these are the red flags, means say indicators for the possible fraud. Okay, only indicators. It might be possible there is no fraud. Even indicators are there, there is no fraud, but it is possible, due to these indicators there might be the possibility of fraud also. Okay, so these are the red flag. First, I'm going to cover the red flags for fraudulent financial reporting. Okay, fraudulent, it was the first type of the fraud, like fraudulent financial reporting. What are the red flags for that? So there are various points are inside, just every point is explained with the example, so you can just go through here, you can pause the screen and read it. Number one, the first red flag is performance too bad or too good. For example, a company suddenly shows a 300% profit increase. It means now it's too good performance you are showing, right? Too good. So in one quarter without any major changes in the operations, your operations are the same, but suddenly you are showing that, oh, your profit has increased by 300%. So it means there could be a chance of fraud, of fraudulent financial reporting, right? So now here, another red flag, threat of imminent bankruptcy, a foreclosure, or hostile takeover. For example, what it means, a retail chain on a verge of bankruptcy. Okay, like maybe there is a retail chain business that is very near to the bankruptcy. Now, what they're going to do, they are committing the fraud, they are inflating its revenue to secure emergency loan. They are inflating, they are showing, oh, we are very a good company with bright future prospects. So now this is called threat of imminent bankruptcy. Like if there is a threat of imminent bankruptcy, so again there might be a chance that companies might present or uh, the company might misrepresent the financial statements. Okay, then high turnover of senior management. If you see this, like for example, CEO, they are joining and leaving, board of directors, they are joining or leaving, or CFO, he is the guy who's joining. Frequently people are joining and leaving the managerial position. Okay, or maybe the board members are senior management positions. Again, there could be a fraud. For example, the CFO and CEO both resigns within a short period, which may indicate internal control issues or hidden problems. Okay, so it could be again issue. Then another red flag could be a non-financial management's excessive participation in selecting accounting principles. So what they're trying to tell you, like for example, if you are from arts background, maybe you are at the senior position and you are recommending the accounting policies. Okay, use this policy, don't use this. Uh, for example, use FIFO method for inventory, don't use LIFO method. Things like that. When accounting policies are selected by those people who are not having financial background, it means there is a high chance of fraud again. Then there is another indicator that is called a strained relationship with the auditors. For example, when you have they're saying that strained relation means that the company frequently delays providing audit evidence. Like if auditor is requesting something you are not giving, and disputes audit finding aggressively. Like if auditor is trying to, or if he identified some things, you are not taking the ownership of that, you are just disputing audit findings aggressively. So it means you are not having good relationship with the auditors. If this is or you are fighting with auditors. If this is the point, it could be there could be indication of fraudulent financial reporting. Sometimes known history of security laws violation. Sometimes some companies, they might have a history that maybe in past they have violated certain laws and regulation. Maybe for example, Enron company, just giving you example, or any XYZ company, if you know their history that they were fined due to fraudulent reporting previously, again it means there might be a chance right now there might be a chance of fraud again. Okay, now here we have an industry or market declines. For example, a company in the oil sector faces pressure to hide losses as oil prices crash. Sometimes some events are there in the industry. Okay, such events may worse your performance, but you are covering that worse performance by manipulating the data. So that is also indicator of financial fraudulent reporting. Like if there is any certain things in the industry, so you should take care of that. So then we got a poor cash flow. Sometime a company is a very profitable company but on paper only. Okay, but constantly poor cash flow means, say for example, they are showing that they are in the profit, but on the other side they are not paying their interest or the loan or the principal amount on time. Okay, so again it means there could be a indicator of potential fraud. Okay, because they don't have a cash flows, but they are showing profit. It means they are committing fraud, maybe to just to show the profit. Then sometime there could be another point. Sometime maybe some companies, they do the transaction with the related party, a very close party. Like for example, maybe one company, sister company, is doing transaction with another sister, or one parent company is doing transaction with the subsidiary, or subsidiary is doing with the parent, or maybe you are doing the transaction with the board of directors. Okay, so it means there could be indication, because why most of the transactions are with the related party only, it means there could be something wrong. Maybe transactions are not being performed on arm's length. Okay, not on market values. Then high complex transactions. Sometime for example, let's say one company is investing in the forex, okay, in derivatives. There is a chance now they might have done wrong accounting for that, so there could be a fraudulent financial reporting. Okay, then sometime transactions in the tax haven jurisdiction. For example, sometime one company, they might shift his profit to the shell companies. Shell companies is the business entity that exists only on paper, that is called shell company. Okay, and it has no significant assets, operations, or employees, but you are shifting your profits to the shell companies. Okay, and shell company is established in the country where we have a little tax, okay, or less tax, lower tax rate, or less or little tax oversight. So we are attributing the profit to those companies. It could be a source of fraudulent financial reporting. Sometimes unrealistic sales or profitability incentives. If board of directors or salaries are bonus is based on their performance. It means to get the bonus, directors or CFO, they can misrepresent the financial statements. Okay, because they can show that they have achieved the targets through the fraudulent financial reporting just to get the bonus. So these all are the red flags for fraudulent financial reporting. And now we are discussing here red flags, okay, for asset misappropriation. It was the second type of fraud, and these are again the indicators which might show you the possible fraud. Again, I'm saying the possible fraud. Number one, missing documentation for the transaction. For example, there could be a purchases or sales, lot of documents are missing there. It means there is a red flag that maybe someone is misusing your assets. Okay, for example, they are saying, for example, a purchase of office equipment lacks an invoice. There is no invoice for the purchase of equipment. Maybe there is no receipt, or maybe something like that. Then they're telling you large amount of cash on hand. So again, if a company is keeping a large amount of cash on hand, so there is a more chances that people can misuse it, they can steal it. So that is again the indicator of asset misappropriation. Sometimes high valued small sized inventories are other asset. For example, if you're dealing with the gold, diamond, okay, mobile phones or electronics, things which are very small in size, so and that are very easy to steal also, and easy to conceal also, so it means there could be a high chance of asset misappropriation. Then we got it here, unexplained budget variance. For example, Their variance, it's a difference between actual results and the budgeted results. So if there are certain variances and those variances are not explained by the managers or the relevant managers, it means there could be a misuse of assets. Okay, for example, an expense category like travel, sometime when we travel, business travel, so when we spend money, so definitely we take reimbursement from the company. So this is what they're saying, an expense category like travel suddenly exceeds the budget. Okay, like actual amount of traveling expenses more than budgeted without proper justifications. It means there could be a misuse of company cash. Okay, company's cash. Now here, failure of certain employees to take vacations. Like maybe I'm working as accountant, my company is forcing me to take vacation, but I'm not taking the vacations. It means they should think there might be something wrong. Why he's not leaving the position? Okay, or why he's not going for vacation? Maybe he's committing some fraud. And employees who never takes leave may be hiding fraudulent activity that could be discovered in their absence. So that is a indicator of fraud. Then unusual write-offs of receivables. Okay, unusual writes of receivables, like for example, sometime if multiple customer accounts are written off as a bad debts without collection attempt or approval. Maybe you have written off so many bad debts, account receivables at a time, so it means there could be misuse of misappropriation of asset. Maybe the accountant has or cashier has received the money from the customers, but they are not showing and showing as a bad debts. Okay, so it could be indication. Then we got it here, a failure to follow up on past due receivables. Maybe if you are not chasing, or I mean any relevant department, if any relevant department is not chasing their customers for the payments, it means there might be something wrong. Maybe they have collected the money and now they're pretending, oh, they are pretending that maybe customer is not paying. Okay, for example, they're saying a delayed or no action on unpaid invoices could suggest collusion between an employee and a customer. Maybe employee has taken that money and used it. Okay, then shortages in delivered or received goods. For example, warehouse consistently receives fewer items than invoiced. For example, order was for 50 units, but warehouse has received only 30 units. Okay, and it's happening consistently, but they are making invoice for 50. Whoever is relevant person is making invoice for 50. It means there could be a fraud, misappropriation of asset. Where are the 20? Maybe management is taking and selling it outside. Then poor supervision, it could also be the indication of asset misappropriation. For example, managers fails to review report, they don't review it, they don't reconcile, or they don't check approvals, allowing fraud to go undetected. Okay, then we sometimes we have products or service purchased in excess of needs. For example, you need only 10 units, but you have ordered 15 units again. Why you ordered 15? Because 5 extra maybe you can receive and sell. Again, it's a misappropriation of asset. Sometimes payroll checks with the second endorsement. Sometime, for example, one employee has received the check. Okay, and then or maybe the ghost employees. So a check issued to one employee is cashed or signed over to another person. That is called payroll checks. It's also again misappropriation of asset. Then employees on payroll who do not sign up for the benefits. For example, ghost employees. Okay, people listed on the payroll but not working. This is also a misappropriation of asset. May be kept by a dishonest supervisor, and the dishonest supervisor is taking the money. Okay, their salaries of the ghost employees. Then sometimes we have a undocumented petty cash expenditures. There are so many petty cash expenditures which are written, okay, but there is no source document for that, or there are no payments, etc. So for that, no proper documentation, it means there could be a misappropriation of asset. It could be a common address on payables, refunds, or payments. Sometimes if you will find a common address on payables, refunds, or payments, it means maybe someone has created fake customers or suppliers, and around the customers or suppliers file, maybe he is writing the same address. It means it could be the indication of fraud. Then employees address or phone number match suppliers. Employee addresses or phone number match suppliers list. For example, if your phone number is written as a phone number of the supplier, or your address is written as the address of the supplier, so suggests employee may have created fake suppliers account for the personal gain. Then guys, We have some here complaints by customers. Sometime, for example, if customers are complaining regularly that they are not being properly debited or credited in their accounts, or they are receiving poor service, or maybe they are charged for the incorrect orders, it means possibly due to internal fraud. So it could be the indication of fraud. Now, guys, last point, definitely to handle the fraud, especially fraudulent financial reporting. Okay, so we need, or even to reduce the misappropriation of asset risk. Okay, so we need to have a strong internal controls, because internal controls, we studied in the part one that these are the actions taken by management to mitigate the risk. Okay, for example, it could be a segregation of duty, maybe we are using computer generated invoices, etc. So these are internal controls, right? So internal control system, generally it has aimed to prevent, detect and correct the fraud and error. Okay, definitely internal control will help us to maintain accuracy and integrity of the financial reporting also. And definitely sometimes internal controls are designed to safeguard asset, like maybe you are limiting the access, okay, for example, to IT equipment. Only IT manager is having access to the server room, not everyone. So why you are doing this, why you have implemented this control? Because you want to safeguard the asset. For example, uh, warehouse, everyone who is coming in and going out, okay, so he has to maybe pass through the machines, and machines can detect any item which is unpaid. So that is safeguarding of assets. Then controls cannot give you guarantee that that controls will prevent the risk or detect the risk, but definitely controls can give you just a reasonable assurance. Okay, not absolute assurance. Controls cannot give you guarantee. Okay, if you will implement the controls, there won't be any fraud. No, but controls can give us a reasonable assurance. Yes, maybe by implementing this control, the risk of fraud can be mitigated. So remember, risk of fraud never be eliminated, can never be eliminated, but it can be mitigated only. So I hope so, guys. It is clear. This was all about fraud, types of fraud, and fraud triangle, a fraud trio, and red flags for the fraud. So if you have any question, you can ask. So this here, this unit is completed now. So in next class we will cover the next unit. Is there any question you can ask?